Hi, good morning everyone. Welcome to the BidAsk channel. This is your host Sonali signing in. Yesterday we had an interesting session on dollar rupee. The pair went to touch the lows of 81.60 areas and from there it bounced back to 81.85. As was spoken yesterday, the pair had a very strong support at 81.60-65 areas, and while on a break of 81.65 we did go short, but we shorted using the put option rather than going short on outright forwards or futures. Market was looking little sticky around that zone. The traders are an impatient lot, so market did not feel that convinced that perhaps the authorities are okay to allow a strong sharp appreciation of the pair, which in a stop loss driven move would have led the pair down to 81.40 areas. So 81.60 during the RBI fixing period saw that low, and from there it bounced to a high of 81.85 areas, exactly how we had spoken at the technical level. If 81.60-65 does not get broken, then 81.85 is the next level on a higher side that the pair would rally to. We saw the levels getting touched, while overnight we also saw a pair moving higher to 81.90 odd zones. Market did not really have any news per se. It was purely driven by technicals and some move in the dollar index which happened intraday. In the New York session yesterday, we had a very robust earning announcements coming out from Facebook, from Amazon, and equity markets saw a very sharp rally with Dow rallying above 400 points. That gave some bit of a boost to the risk appetite overall, but we did not see the corresponding move really happening in crosses. In fact, euro fell from a high of 1080 odd areas and went to a low of 993. Market was largely divided on the excessive positioning that it is already sitting on the crosses space, and as we suggested, we'd like to enter the crosses from the short side. While euro dipped down sharply, almost a figure yesterday, GBP has been holding a 1.2490 handle for a day now, and while I expect it to get into a profit booking mode, the overall conviction of taking a trade in GBP is currently low, and hence I'd like to sit on the sideline. For the day, I expect dollar rupee to again, till at least expiry, stay very rangy between say a 70 to an 80 band. Markets are very eagerly awaiting on the BOJ decision on what they come out on their forward guidance. Unlikely that they will do anything in this particular meeting on their yield curve control, but their guidance on how they expect the monetary policy to be moving is something which is very crucial, and markets are awaiting the announcement which will come anytime soon. For rupee for the day, I think after the expiry is over, gauging the momentum of the crosses in the dollar index, I'm more keen to go long on dollars at a dip, anything that I get closer to 81.65 areas, because it's not looking very convincing that in this rundown we'll see a break and a convincing break lower. 81.65 I go long with a stop loss of 81, a very close stop loss of 81.59, 81.57 areas, and looking to TP it at a same 81.85 odd zones. I'll probably look to enter a fresh shot at 81.85/90 area, unless of course there is any big move which happens on the dollar index in the run up to the Fed policy on 3rd May. I think that's it for the day. Any big move, any new announcement, you'll hear back. Till then, have a good day. Sonali signing off.